Thank you for tuning in to another edition of Pre-Market Poll Scan. The time is 10 minutes after 9 a.m. Eastern Standard Time. Today is Tuesday, July the 18th, 2017. It's amazing how you can forget the days of the week and not know what day it is. That's what happens when you're busy. All right, jumping right into the thick of things, overnight markets. We do have a situation where the Dow is down 42 points right now. You can see this looking at the left-hand side of the screen. We're at 21,539. NASDAQ 100 futures is down 14 3/4 points at 58.40 1/4. Even the S&P right now is down 5 at 24.53 half. Russell is down 490 at 14.26. And the natural gas is at 309, up 7 cents, which is impressive. Gold is also impressive, up $6.70 at 12.40.30. And silver is up 9 cents at $16.19.5. Crude oil is at $47 even, up 77.5 cents. Long bond trying to make a comeback. It's up 13.30 seconds at 153.09. Soybeans also trying to rally back. Is at 10.11 3/4, up 14 1/4 cents. Looking at the euro, it's up a whopping 82 pips at 116. The pound is down 34 pips at 130.49, and the Aussie is up 130 pips at 79.24. The dollar is down 54 ticks at 94.59. We have hit the 94 handle in the dollar. They have no choice. They have no choice. They have to let the dollar fall a bit. And like I have told you in previous videos, the dollar being down is still not a bad thing. Anything in the 90s is good for the dollar. It's strong. 90 and above is strong for the dollar. So it still has several more points. It can fall and still be considered in a bullish configuration. Not looking at your chart, you won't see a bullish configuration on your chart pattern. It's more of a grand super cycle algorithmic equation looking at the longevity of the short-term and long-term patterns from a historical perspective. For those that are in the know, they know that the dollar is still mad strong when it's 90 and above. Below 90, you start to hit that weakness. 80s is neutral. All right, anyone who's been trading the dollar for the past few decades will know this. All right, so don't listen to the talking heads talking about, oh, the dollar's dying. It's not dying. All right, the bullish momentum is dying, but the dollar is not dying, not by a long shot. 90 and above, you can get your pencil and paper out, ladies and gentlemen. 90 and above is bull strong territory for the dollar. That means they are maintaining a strong dollar policy. Below 90, when you're in the 80s, that's neutral. All right? You can call it whatever you want, neutral, dovish, whatever you want to call it. When we break the 80s and drop into the 70s, that is weakness. That is bear market territory. That is, the death spiral. You can start talking about Armageddon scenarios and the death of the dollar and all that when we're in the 70 handles. Okay? So now you know your categories. 90s, strong dollar policy. 80s, weak, neutral to weak, and 70s, definitely weak. And the Fed wants to keep it out of the 70s. Your mid-ranges within these categories are as follows. For the dollar, believe it or not, it's 95. For the neutral, it's 88. And for the bear, or the 70s category, it's 77. All right? Those are your price inflection points in the dollar. 77, big deal. 88, big deal. 95 in the dollar, big deal. All right. Just so you know, we're only a few cents shy of 95 right now. So it's not a big deal. All right. Just keep your shirt on. It ain't time to panic. That's just what it is right now. We still have a strong dollar policy. They're just letting some of the air out of the tires, but it's still strong, believe it or not. All right. So if you want to look at weakness, technically speaking, the euro is mad weak, decimated. So is the pound sterling. All right. The Aussie, technically speaking, is in strong category. It's in strong territory, believe it or not, looking at its historical patterns. But the euro and the pound is shook. All right. Remember, this pound was at 140, people. 140. You're at 116 now. All right. This pound was also in the one. No, it broke two at one point, I believe. It broke two. We're at two. And now you're at 130. So come on, man. All right. Looking at the gold chart. If you take a look here at this gold chart on the daily chart, you see that it's really going exactly to where I told you it was going to go. Here you are at the trend line. You're going to have a hard problem with this 1243 to 1245 level. It's going to have a tough problem. It's going to need to close above 1243.80 if it's going to have any hope at making a run toward the bottom of the Kumo cloud, where it will be met with massive resistance around the 1257.40 level. Massive resistance. All right. The bots are going to come in and start selling between 1243.20 all the way up to 1256.80. That's where the bots are going to kick in and start building a short position. If they are successful, and they probably will be, I sound like George Bush Sr. now, don't I? We will have our new world order. Then you're going to get back down to this price inflection point right here between 1232.70 and 1228.40. That's going to be your median price inflection point from the pullback from this resistance zone here, and this takes us out right here to the next quarter. To be honest with you, it takes us right here to the third quarter, basically. All right, so you're looking at July the 21st to the 31st is going to be this median price. We won't go anywhere. We're going to be right here. All right, all things being equal. Now, of course, things can happen, change this price dynamic, but this is where we are right now, people. All right, I'm just saying. Moving over to silver. Silver is a little bit different. It doesn't have that oomph that the gold has at the moment, but again, this could change. It's really struggling at this first resistance zone of $16.15. It wants to make a run to $16.63, so it's good for $1 here. If it can succeed with a close above $16.15 today, then it stands a very, very, very big chance of running to 1663, at least. All right, we'll get an effort like this. All right, we'll get a grand effort like this right here. So I think that's where we are right now. But we have this massive downdraft, this incredible undertow, this incredible underbelly. Then wants to pull prices back down. And we're looking at around July the 28th. Unfortunately, I think we'll be around 1560, 1556. All right, is where it's in jeopardy of going. Unless something really changes. I mean, if people start piling in up in here, up at 1704, then that can push it to the 1714, get it in the cloud, and then push it topside the cloud up to 18. That can happen, but it's going to need a lot of bullishness, and you're going to need bears to start liquidating and stop attacking. They're going to have to give up. And at this point, I don't see them giving up. All right, let's see what's going on with your oil. All right, on the oil side of things, you see it got right here. It's right here in the air pocket of mighty, mighty, mighty resistance. 47.53, give or take a few pennies, is going to be a resistance price inflection point for the shorts to get in here. All right, be careful because this is a very important price inflection point. You may want to write that down. All right, price inflection points go either way. All right, it's the tug of war zone. All right, between the bulls and the bears. If the bulls are successful, then the momentum will pop this outside of the cumulus cloud to the top side. If the bears are successful, you will get a parabolic bar that looks like this. And that brings us down to here around the time frame, actually closer in. You're looking at July the 20th. That's in 2 days, folks. All right. So price inflection point on this one comes in with price and time configuration. So you got to look at 2 days. Excuse me. You got 48 hours for this possible scenario to play out. After this, the super bearishness comes in. So we'll see what happens on that one. All right. Everybody wants to know about the stock market. Or if you play Animal Crossing, it's the stock market. All right, here we go. Let's look at the stock market. Jack and the Beanstalk market. All right, here you go for your Dow. Looks like we're starting to pull back some more. All right, this is not necessarily a bearish sell signal, ladies and gentlemen. All you're doing is trading within the zone here. That's all you're doing. You're just pulling back within the zone. It's not a big deal. All right, got about a 50% retracement inside this zone here. That's all you're doing, ladies and gentlemen. This price action is not a big deal because it's not happening outside of the price zone here. All right, from the last high of 21,628. If this price action was taking place outside of the zone, then we would say, okay, now we're having some possible pattern destruction. But this market is so super bullish. I see this being bought up as well once this corrective pullback is over. We could get more downside momentum. A close below the momentum line of 21,524 today. A close below that will open up the door for further correction down to the 21,409 area, and then possibly down here toward the 21,190. I don't think we'll get that far, but you never know. Market just has so much bullishness caked in. All right, so how to play it? All right, well, you have a few options, of course. You have your S-Dow. All right, if we look at the pulse waves today, you can see that this ETF has been in a parabolic downward spiral, rightfully so, because the stock market has been so incredibly bullish. We have no positive momentum readings to give you, so there's no hope there. However, you could get a pop if the downward momentum accelerates today, and that could give you a trigger into the S-Dow. So you're going to look at the S-Dow, you're going to look at the QUID today, QID, and you're probably going to want to look into the SQQQ. All right, so, but more so, I think your Dow, your S-Dow stands the biggest chance, I think, of coming into play if there's going to be, some real price action, look out below type scenario. I think that's going to be your best bet. But I even doubt that that's going to work out. I just don't see any real major downside coming. I could be wrong, but if I am, ladies and gentlemen, it's the S-Dow. It's all about the S-Dow. All right. That's all I got for now. So remember, pulsewavetrading.com. Come learn how to read the tea leaves of what the Fed may or may not do and benefit from it. Learn how to run other people's stops. Learn how to run the Fed's stops. Absolutely. Learn how to tee them off. Postwavetrading.com. Bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. Peace. Even the S&P right now is down 5 at 24.53 half. Russell is down 490 at 1426. And the natural gas is at 309, up 7 cents, which is impressive. Gold is also impressive, up $6.70 at 1240.30. And silver is up. Thank you for tuning in to another edition of Pre-Market PULSESCAN. The time is 10 minutes after 9 a.m. Eastern Standard Time. Today is Tuesday, July the 18th, 2017. It's amazing how you can forget the days of the week and not know what day it is. That's what happens when you're at the euro. It's up a whopping 82 pips at 116. The pound is down 34 pips at 130.49, and the Aussie is up 130 pips at 79.24. The dollar is down 54 ticks at 94.59. We have 9 cents at $16.19.5. Crude oil is at $47 even, up 77.5 cents. Long bond trying to make a comeback. It's up 13.30 seconds at 153.09. Soybeans also trying to rally back. Is at 10.11 3/4, up 14.25 cents. Looking as a all right. Jumping right into the thick of things, overnight markets. We do have a situation where the Dow is down 42 points right now. You can see this looking at the left-hand side of the screen. We're at 21,539. NASDAQ 100 futures is down 14 3/4 points at 58.40 1/4.